Trading 360. I'm Nicole Petalides, live at the New York Stock Exchange. Glad you're with us. It's time for the big three. 3 stocks, 3 charts, 3 trades. Rick Ducat will take us through the charts. Here to take us through the trades, Alan Nuckman, Chief Market Strategist at BullseyeOption.com. Great to see you both. We're getting closer. I was just looking at the S&P to see the high, which was 5264. Yep. Okay, we're at 5204. But, hey, that's 5,200. That was a sort of an area of resistance that everybody was watching. Tell me some of your thoughts here, Alan, today.
Well, it's very simple. I'm not trying to be stupid. I'm not trying to be the smart guy either and pick the top. The trend is strong, and I'm a trend trader. And I noticed the last guy was a little bit timid, but the trends are extremely strong. You've got the 10-year note yield at 1-month lows. You got the VIX at multi-month lows and approaching, the 13 level and down 35% in the last couple weeks. And if you look at the S&P, look at the price action. We had a dip and now a rip. And now we're above the halfway point of that drop from the top. And every time in market history that we've got above that halfway point, we've made new all-time highs. So a full V recovery targets about 5,700, which was nearly 10% higher here in the S&P. So the trends are strong until proven otherwise.
Trend is your friend sometimes.
Yep.
Alan, okay, so let's get to the corn ETF. Bringing us some commodities today. Tell us about this.
Yeah, well, number one, my friend Ben, who's not here today, I will be on his show, the Future Show, on Tuesday morning at 7 a.m. And now this is a corn play. And so, I'm a commodities trader by trade. I started on the trading floor there. So looking at corn is a nice opportunity, a great chart, and that's what I look for. The corn ETF that tracks corn itself has been between, been in a range as well between 450 and 550 for about a year. And so if it gets above the $5 midpoint, we're going to see a move. We're at 480 in corn itself. Now, the ETF that you can trade, anybody can trade in their account, in their stock accounts, traded about 2050. It's been between 19 and 23 here for the last year of trade, last 9 months anyways. So a breakout of the range targets 27. Now, we were at 27 just last July. So there's also a gap up above at 23.5. I've seen my bullish divergence with that February low. It did not make new highs in implied volatility. That's a sign of a sentiment shift. And I'm also seeing a lot of leverage buying. The way to play is I'm buying a 19 call. Again, 19 has been that bottom base. That's trading for about 2. An August 19 call has 3 months of time. The expiration break even is about 50 cents higher. It has got time for development. And a lot can happen, obviously, during the course of the summer that's going to affect any plant that grows. We plant the seed, nature grows the seed, we eat the seed.
All right, and I like that sort of promo for next week, too, for Schwab Network. That's good. Rick, tell us your thoughts.
Well, let's see if I can give you some kernels of wisdom here for this corn chart. So what I see here, we bottomed out at our 52-week lows near 1872 here. And since then, we've been trending upward from that point here. And we moved above our 2 moving averages, yellow 21-day, orange 63-day, purple 250 2-day still above us, but the 2 shorter term moving averages, we moved above them. And now they're clustered together. The faster one is outpacing the slower one just very slightly. They're trending upward, which suggests the trend is improving. Perhaps we've bottomed out here. We had a bit of sideways movement. Now we're pushing to the upside beyond this volume node on our volume profile study here, right around the $20 mark here. So this is an area of heavy trading. It's important that we're able to work our way above it here. So now we look at RSI, our measure of momentum, also trending upward, mostly matching along with the price action. The important thing here is we crossed above the 50 midline that separates bearish from bullish momentum. So the moving average analysis, we're more bullish to that way. We are seeing momentum in the hands of the bulls as well here. So the $21 level, 21.14 is where I had my eye on. That matches up pretty closely with Alan's break even for his 19 call at the $2 debit here. So that's a small gap that we had. And the subsequent highs after we broke to the downside here were about the same point here. So that was a resistance area that I had my eye on. Beyond that, 2240, we can see that was a low point and then a high point here. And it's also very close to our volume profile point of control, the area of heaviest trading near 2230 to 2240. That would be a resistance area to watch. And then support at our range lows here near about 1950.
All right. You have any final thoughts on this one here?
Well, to
Alan?
keep banging the drum on commodities, wheat has broken out, WEAT, which is the ETF that tracks the wheat market. So you've seen a pause in an everything bull market. You've seen a pause in some of these grain commodities, and I think the risk reward is really set up there. 21 is the pivot level here. If it gets above 21, then you're going to see this market pop. The expiration break even is only 50 cents away, and you've got more than 3 months of time. So I like how that's set up.
All right, next up, you're looking at Wayfair. How are we doing on Wayfair lately?
Well, Wayfair's been sideways as well. And the longer something trades sideways, the more energy it's building for a breakout move. Now, it's bottomed out. It has been trading between 50 and 70. And I'm seeing my money flow, my leverage buying accumulation in this stock. And so that's very much a positive. And so I'm looking at the August $60 call, which is the midpoint of that range, trading for about 15. It's deep in the money, 3 months of time, 75 delta. A breakout of this range targets 90, and that 90 is also the high from last August, and this option would gain 100% if we got to that 90 level.
Okay, I want to hear what Rick Ducat has to say about the Wayfair chart here. The technicals, please, Rick.
Definitely a sideways move during the past several months here, really since November or so here. You can see we had a clear boundary at this red line here near 69.66, let's call it around 70 or so, and a clear floor repeatedly testing this area near 49. So a very obvious range here. Our moving average is kind of bouncing up and down. Our purple 250 2-day, our longer term one, mostly sideways here. You can see once again, they're all clustered together, which suggests a lack of a clear trend direction here. However, the faster ones are starting to outpace the slower ones here, and most importantly, we are breaking out to the upside here above this resistance level around 70 here. Momentum is also improving as well. We invalidated our trend line. We broke above the 50 midline. So this is shaping up to be a potentially exciting move for this stock here. You know, what Alan said is you know, kind of an old adage in trading that low volatility often leads to high volatility. So a range-bound market can prime the pump, so to speak, for a big breakout here. If we do break out to the upside, I also had my eye on the 75 level because it represents a couple highs we saw right here. So $60 call with a debit of $15, that would give you $75 break even. So a push above that level is what we're looking for there. To the downside, moving average confluence, that would be a supportive area to watch here, particularly our long-term purple 250 2-day EMA. So between like 58 to 60 or so would be an area to watch to the downside.
Okay, thank you for that. You both noted that sideways-ness that we first saw,
Right.
you know, for the big picture on that. Look, 1 year, it's still an incredible performer. I mean, anybody would be happy with a 93% return. So I'm curious, just the final thoughts here. By the way, RBC has 65 up from 61. They have a sector weight rating. TD Cowen, they have a price target of 58 with a hold rating, just to name a few of the recent calls. Wedbush, $70 outperformed. Final thoughts?
Well, looking at it, it's breaking out, and we're going to jump on the momentum move here, and it's still a long ways away from that 90 high. So let's see, you know, the rest of the market's up there at the top. Let's see if this stock can play catch up. We're using a limited risk, deep in the money option that's going to act like a stock. I can sleep well at night. And when I'm looking through my phone at new patio furniture, maybe this stock will reflect that.
Okay. What about Schlumberger? Are we worried about SLB? It's been coming down. I saw some price target cuts.
Risk reward, that's what this play is about. We've seen crude oil, you know, it's been largely between 65 and 85. A breakout range targets 105. First thing I'm going to say is 105 is about half of the 2008 crude oil all-time high adjusted for inflation. And so I don't think that's going to have a negative impact on the market. Actually, a higher crude oil price, in my mind, is always a positive sign of the economy humming because there's demand there. Now, we're still at a really low level in crude oil historically, but we've found a little bit of a base. We backed off from 85, and you know, we've based out here. A little move above 80 could get this moving once again. So if I look at SLB, it's been trading sideways between 47.5 and 62.5 for a year. The midpoint is 55, so if we can pop up here a little bit, we could get up above that 55 and then make a test on that range top. I'm looking at the August 45 call, which is below that sideways range. That 45 calls trade for about 5. Now, the volatility, the expense of that option, even though when we're trading in the money options, only the out of the money part is impacted by volatility. But the expense of that option is half of what it was, because volatility is now half of what it was. So it's setting up for some success here on the upside, in my opinion. The August 45 call at 5 is in the money, 75 delta, and look for that to perform as also a hedge against higher energy prices, which, like I said, we're in an everything bull market.
Okay, thank you for that. Final, let's have Rick look through the technicals, see what he has to say.
Yeah, a bit of a slide this year. You can see that we've fallen off from these highs near 62.12. We're down about 22% from that point here. We've got this longer term trend line in blue here in play still. We've had some fluctuations around our moving averages. Once again, purple 250 2-day largely sideways here with price oscillating around it here. You can see as well we formed a bit of a low between our light green line and our dark green line here. These were an area where we bottomed out repeatedly between about 47 to 48 or so. So this is a noteworthy area that we just bounced off once again here. It's looking like we are firming up a little bit and holding on above that level. You can see momentum has also improved when you look at our RSI. We had a brief dip into the oversold area here, but we've invalidated that trend line. We've crossed out of the oversold area, which is a bullish sign here. So the next step is to take out some of these resistance levels that we've got on our chart here. We've got our volume profile point of control right near the 49 mark or so. We've got our 21-day EMA just above that at like 49.39. So we would need to clear those two areas to get to our the break even of 50 on the trade here. And from that point, I'd be curious about the same level here near about 55 for potential resistance here. But we're near a short term or a medium term floor here on support. So let's see if it holds and if we can get a rally in this name.
Okay, we will see. I'll give you the quick final thought here, Alan.
I've got confidence in the cartel to turn this around. So it's a great risk-reward play.
Okay, we will watch for that. Great to see you both. And of course, we will watch for you with Ben on Futures next Tuesday morning. Thank you, Alan Nuckman and also Rick Ducat. Thank you both for the big three today. Coming up next, we're going to spotlight ARM Holdings. We are seeing the stock under some pressure after its quarterly report. Angela